if you add in Russian and other BRICS gold, then the BRICS nations could monetize some 80,000 tons of gold. These are real numbers. And it's just a question of following the footprints. Think about this. Weigh this up against the 8,134 tons of gold that the US Treasury lays dubious claim to because of all the audit requests over the last 50 years. They've all been refused, which is ludicrous. Whereas this enormous disparity against this huge hoard of BRICS-centric gold, which actually comprises of 100% fully paid for physical gold, presents zero counterparty risk.
In a startling revelation, Senior Analyst Andrew Maguire has claimed that BRICS nations potentially hold 80,000 tons of gold, a figure that dwarfs the US Treasury's reported 8,134 tons. This vast disparity in gold reserves could significantly shift the balance of global financial power, especially considering the lack of transparent audits for US gold holdings. The BRICS bloc appears to be leveraging its substantial gold reserves as a strategic asset. Recent data from the World Gold Council supports this trend. The Reserve Bank of India increased its gold reserves by 5 tons in July alone, bringing its net purchases to 43 tons in 2024, and raising total reserves to 846 tons. A senior analyst at WGC noted, "The RBI has now added gold every month so far this year. Even as gold prices set new all-time highs, net purchases by central banks more than doubled to 37 tons in July, and demand is expected to remain strong over the coming months." China, in particular, is seen as a pivotal player in de-dollarization efforts and potentially establishing a BRICS currency. Maguire suggests that the U.S. approach towards China may backfire due to a perceived lack of strength in the U.S. position. The impact of these shifts is not lost on U.S. political figures. Former President Donald Trump recently admitted that United States sanctions are hurting the dollar. During a public appearance, he stated he would lift all sanctions on Russia and Iran if re-elected in November. This acknowledgement underscores the unintended consequences of weaponizing the U.S. dollar, which has driven mass de-dollarization efforts over the last several years, primarily led by the BRICS bloc. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Add this into the avalanche of visible Chinese dollar assets, the unfactored over 3.24 trillion of hidden, unregulated, bilaterally settled Chinese shadow banking reserves that Setster has exposed, then this avalanche is potentially so large it threatens to topple the 2 quadrillion derivative market and indeed presents a risk to the global economy, unless, that is, the Western central banks, including the Fed, revalue gold, which, other than starting World War III, revaluing central bank gold reserve accounts is actually a very simple procedure. Now, it does concern me that they may want to start World War III because the US dollar hegemony, unipolar US dollar hegemony, is toast. Now, given Setster currently sits on the board of the Council of Foreign Relations, which is a body that Gatta has exposed, particularly Chris Powell has drawn a lot of attention to the fact this is an organization they've exposed as being one of the primary actors behind the last 50-odd years of dollar gold interventions. And it's not surprising this golden elephant in the room was hidden. But China is threatening to break its chains. Now, the reason I wanted to revisit this shadow banking subject again now is the sanction crosshairs have aggressively shifted to China. And while they hold all the de-dollarization cards and an upcoming BRICS currency to play them into, there is no requirement for the PBOC to employ the financial nuclear option of dumping US treasuries. So instead, it's simply incentivizing Beijing to move from stealth to pushing back against the US current. And the US is operating a carrot and stick approach, which is exactly what that visit to China backfired on the US last week. You can't do that. You don't have a strength of position. And so anyway, so this carrot and stick approach really trying to stop the conversion of these dollar assets. But what it's going to do is reignite, it has reignited the not yet reported official buying, which will later be reported as having been triggered, alongside continued bilaterally settled 400-ounce monetary gold shadow banking purchases, which are off the record. Now, given Basel III NSFR standards have recategorized gold as a competing first-tier asset class, it forces the West when we see the buyers coming in, the AM fixes, the PM fixes, it forces, but primarily the AM fixes, which are really Asian facing, it forces T+1 delivery of synthetically undervalued global FX gold purchases, emptying Western vaults into the PBOC state-held bank coffers.
The BRICS alliance, consisting of Brazil, Russia, India, China, and South Africa, has made de-dollarization a top priority to reduce reliance on the US dollar and create a more equitable international financial system. The push for de-dollarization is most evident in China's recent financial maneuvers. Senior Analyst Andrew Maguire stated that China's gold accumulation and currency strategy point to a significant global economic shift. The People's Bank of China has been quietly purchasing large amounts of gold using the renminbi, potentially leading to a faster de-dollarization process due to anticipated Federal Reserve rate cuts. The impact of these efforts is already visible. Recent data shows that 53% of China's international or cross-border transactions are now conducted in Chinese yuan, a stark contrast to a decade ago when this figure was close to zero. This rapid shift demonstrates the effectiveness of China's strategy in reducing dollar dependence and promoting the use of its own currency in international trade. Let's get back to the interview.
Furthermore, imports of artisanal doré gold are hidden in the dollars for gold mix. PBOC buying of all home-produced gold is largely transacted in RMB, which, for reasons we will look at now, is expected to strengthen into an avalanche of dollar sales. Now, as Jen assesses, Chinese firms have amassed more than 2 trillion since the pandemic in offshore investments, parked in assets that really pay higher rates than yuan-denominated ones. And when the Fed lowers borrowing costs, the appeal of dollar assets erodes, and at best estimate potentially spurs, as he puts it, a conservative 1 trillion of flows back home as China's rate discount with the US narrows up. Now, as we assessed in our last few episodes, our liquidity providers have been confirming dollar selling to acquire gold, notably picked up in 2010, directly after the IMF refused to sell the PBOC the 200 tons of remaining IFM gold, which followed India being sanctioned to buy 200 tons directly from the IFM, the IMF, at $1,000 per ounce. Now, as we've since been tracking, these largely unreported monetary gold purchases, picking up after the dollar was weaponized against Russia in March 2022, much of it being transacted in very, very large oil for gold trades, but visibly and officially reported picking up in the last 18 months. That cannot be hidden. Now, however, given if we put this fresh de-dollarizing Fed rate cut aside for a moment, which is about to trigger an avalanche, as he puts it, of dollar selling, the de-dollarizing process has already picked up significantly ahead of October the 22nd BRICS gold currency launch. Now, while such an avalanche of dollar sales would also serve to support the yuan, as we drew attention to in our last episode, liquidity providers have also been reporting this very large pickup in direct bilaterally settled dollar-denominated monetary gold, 400 ounce, 995 bars, exiting largely London, also Switzerland, but largely. But we've also, in addition to that, there are as yet unreported fresh official gold purchasing that is occurring, and that'll be reported later, into an expectation of a strengthening yuan. Makes sense. And aside from what briefly appeared on the Bloomberg terminal, as yet, this story has not yet even gone mainstream, and I don't think it will. However, our well-connected Chinese contacts say it was no coincidence that White House National Security Advisor Jake Sullivan concluded a 3-day trip to Beijing last week, comprising of several meetings with Chinese officials, including Xi Jinping. And while the officially reported agenda, the items, they range from Beijing's warning against the US arming Taiwan, South Sea disputes, the aggressive sanctions on China, including those related to Ukraine. Election interference was one of the subjects. But really, the unreported elephant in the room was the BRICS-related de-dollarization avalanche.
The BRICS nations' concerted efforts, led by China's economic strategies, are reshaping the international economic order. As these countries continue to reduce their reliance on the US dollar and develop alternative financial mechanisms, the global monetary system is poised for a significant transformation. This shift could lead to a more multipolar economic world, potentially reducing the unilateral influence of any single nation's currency. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.